Ladies and gentlemen, welcome to the channel. Today we are going to be talking about working from home expenses, and in particular using the fixed rate method. The fixed rate method requires you to calculate the number of hours that you've worked at home during the financial year, and then you simply multiply that number of hours by 70 cents, which is the ATO's set rate for the 2025 financial year. If you'd like me to help with your tax return, please find my email below in the description. Also, please like and subscribe. It's all anonymous, but it really helps the channel. Now let's go onto the ATO website and find out a little bit more information about the fixed rate method of claiming your working from home expenses. Type working from home expenses into Google, and the first link will be the Australian Taxation Office and the working from home expenses page. So deductions for expenses you incur to work from home, such as stationery, energy and office equipment. Bit of information on eligibility to claim. To claim working from home expenses, you must be working from home to fulfill your employment duties, not just carrying out minimal tasks such as occasionally checking emails or taking calls. Incur additional running expenses as a result of working from home. Have records that show you incur these expenses. So there's a helpful video. Additional running expenses. Running expenses relate to the use of facilities within your home. These expenses are generally considered private and domestic expenses. You can claim a deduction for additional running expenses you incur as a direct result of working from home. Additional running expenses may include electricity or gas, home and mobile internet or data expenses, mobile and home phone expenses, stationery and office supplies, the depreciation of assets you use, and the repairs and maintenance to depreciating assets. In limited circumstances where you have a dedicated home office, you can claim occupancy expenses. Choosing a method to calculate your claim. There are two methods available to calculate your claim. The fixed rate method, which is what I'll talk about today, is an amount per hour for additional running expenses, allows separate claims for expenses not covered by the fixed rate, such as the decline in value of depreciating assets, doesn't require you to have a dedicated home office. So it's much simpler than the actual cost method. So the fixed rate method, check your eligibility to calculate your working from home expenses using the fixed rate method. So you can use the fixed rate method if you incur additional running expenses as a result of working from home. Have a record of the total number of hours you work from home and the expenses you incur while working from home. How it works: you can claim a fixed rate for each hour you work from home during the relevant income year. The rate includes the additional running expenses you incur for home and mobile internet or data expenses, mobile and home phone usage expenses, electricity and gas for heating, cooling and lighting, stationery and computer consumables such as printer, ink and paper. This is the important part to note. The rate per work hour includes the total deductible expenses for the above additional running expenses. If you are using this method, you can't claim an additional separate deduction for these expenses. Fixed rate method. To calculate your deduction using this method, multiply the number of hours you work from home by the hourly fixed rate in the income year. So for the 2024-25 year, use 70 cents per hour. How to claim expenses that the fixed rate doesn't include. You can separately claim a deduction for the work-related use of technology and office furniture, such as chairs, desks, computers, bookshelves. These are generally depreciating assets that decline in value over time. You can also claim the repairs and maintenance of these items. If the item costs $300 or less and you use it mainly to produce non-business income, you can claim an immediate deduction for the cost in the year you buy it. This may include items such as keyboards, computer mouses, power boards, desk lamps and chargers. For items costing over $300, you claim the decline in value as they are depreciating assets. Occupancy expenses such as mortgage interest or rent. I don't recommend claiming mortgage interest, but rent is okay to claim. Rent is a good one to claim. Cleaning expenses, such as the cost of cleaning that relates to the work-related use of a room in the house, in your house set up for a home office. So the main takeaways from that are you add up the hours that you've worked at home during the financial year, you multiply the total hours by 70 cents, and you have your deduction under the fixed rate method. On top of that, you're allowed to claim equipment purchases and depreciation of assets. So you can claim an office chair, a mouse, a keyboard, and furniture equipment. And if it's over $300, you claim the depreciation on it. I hope you find that helpful, guys, and it increases your deductions and ultimately your tax refund for this year. Thanks for watching, and I'll see you on the next one. Bye for now.